Facebook stock is getting crushed today. It's been down between 20 and 25% from what I've seen. I want to go ahead and walk you through a data set to show you exactly why that's happening. And we can also look at some commentary that the management team has given that will also explain why investors are as freaked out as they are. Let's jump right in. The data set that we really want to sink our teeth into is called daily active users. And it's pretty self-explanatory. These are the number of users of Facebook's app on average on a daily basis. And that's what we're looking at in the first chart. We'll see that in the fourth quarter of 2019, technically at the end of the fourth quarter of 2019, Facebook had 1,657 million daily active users, or basically 1.7 billion daily active users. And that climbed all the way to 1.9 billion users by the end of the fourth quarter 2021. In terms of growth, that's an 8% CAGR, an 8% compound annual growth rate, which isn't so bad in a vacuum, right? I mean, Facebook is massive. They have nearly 2 billion daily active users. So we're talking a meaningful fraction of the global population, and growing at 8% a year over the past 2 years isn't something to sneeze at off a base that large. But it gets a little more interesting when we click into the next set of charts. And now we're looking at the mix of users for Facebook. Again, at the end of the fourth quarter of 2019 versus the end of the fourth quarter in 2021. And we see that over these past 2 years, the US and Canada and Europe have become a little less important to Facebook than they were 2 years ago. And by a little, I really do mean a little. US and Canada went from 11.5% of daily active users down to 10.1% of daily active users. Likewise with Europe, we see a small step backward. The rest of the world basically is flat, and Facebook's growth over the past 2 years has largely come in Asia Pacific. And it makes sense. We know the management team is paying a lot of attention to the Asia Pacific region. There's a large fraction of the global population in that region. So for a business the size of Facebook, we're not surprised to see growth and performance levered so heavily against Asia Pacific. The next chart now, we see the progression quarter by quarter across each of these regions for daily active users. Now we start to see why investors are freaked out. We see this trend in Asia Pacific of basically straight line growth over the past 2 years. But very importantly, in 2021 Q4, that number is flat. That region did not grow, and that's been the growth engine of Facebook. That is probably the scariest single data point in the release for investors in terms of thinking what future growth prospects look like for Facebook. If Facebook's competition really is cutting them down in that kind of market and suppressing their growth potential there, where else is Facebook going to grow? How else is it going to improve on its both top line and bottom line performances? These questions get really important and really scary to think about when you don't see a continued growth trajectory the way that Facebook has in the past. We've seen Europe, US and Canada both nominally flat and have been for the past 2 years. So again, we know that Facebook's been looking out to Asia Pacific and the rest of the world. In those two regions is what we've seen plateaued growth in 2021 Q4 that we had not seen in the previous 8 quarters. So we can make this analysis a little simpler by, rather than just looking at the total daily active users, let's look at the change in daily active users quarter on quarter. That's what this next chart is showing us. And again, here we see big numbers for Asia Pacific. We see Facebook adding north of 10 million users every quarter, sometimes north of 30 million users every quarter for the past 8 quarters, except in 2021 Q4 when they added 1 million users in Asia Pacific. Europe has been flat, so it's not shocking to see that number continue to stay flat. Same story for the US and Canada, but we see it in the rest of the world that there were some meaningful growth numbers occurring in the rest of the world, and now we see Facebook losing 3 million users in 2021 Q4 relative to 2021 Q3. This visualization is not something that Facebook shows in its annual report. It shows the previous visualization, just the all-in daily active user count, which is fine, but this change in that level really starts to show where Facebook is struggling. And again, why investors are as freaked out as they are and why the stock price is plunging the way it has. Next up, I want to show you some commentary from Facebook's management team. It'll really give us a sense of, again, what the prospects look like for the business going forward beyond just the realities around daily active users. These quotes are going to be from Facebook's 2021 year-end earnings call. So we see its top-tier executives talking candidly about the performance of the business historically and what they expect going forward. This first quote is from Meta's chief financial officer. and it's a pretty important one. It says, and we believe the impact of iOS overall as a headwind on our business in 2022 is on the order of $10 billion. And it's important to understand what he means when he says iOS in this context. In 2021, Apple made some important privacy changes on the iPhone. It makes it easier for users to opt out of tracking that apps like Facebook rely on to serve targeted advertisements. And just that change in how people interact with their iPhones has a profound impact on the advertising business across the world. And for Facebook, that number is $10 billion of revenue. And as you probably know, there's few businesses on the planet that even generate $10 billion of revenue in a year. And Facebook is saying that's the hit it's going to take on the top line just because of changes that Apple made in terms of privacy settings that users of the iPhone have access to. It's a massive number, and if one company making that kind of decision can have an impact of that size on Facebook, that also gives investors a reason to worry. And it's not just the $10 billion number that can be scary. It's the fact that, as Meta's chief financial officer admits, these changes from Apple are going to disproportionately punish Facebook relative to Google, because these privacy settings target searches inside of apps much more than they do searches inside of browsers. And Google relies a ton on browser search. Google also pays Apple billions of dollars a year to be the default search platform in Apple's products. And so there's an incentive there for Apple and Google to look out for each other in a sense, because they rely on each other's performance when it comes to Google's search. But the app-based performance that Facebook relies on, that's more vulnerable. And that also means that investors are freaked out, because if Google is being advantaged relative to Facebook, then that might change the way investors want to deploy their own capital, maybe steering a little more toward Facebook, a little more toward Google, and a little less toward Facebook. And even capital movements on the margins like that can have a big impact on the stock price of companies as large as Google and Facebook. The last point I want to bring up is what Mark Zuckerberg talked about on the call, specifically relative to TikTok. He brought up TikTok a handful of times. He was asked a handful of questions about it. And again, his candor here tells investors that TikTok is a real concern. It's a real threat for Facebook. And this commentary is going to make investors think a little more heavily about just how successful will Facebook be going forward, knowing it's competing against a behemoth like TikTok. On the call, Zuckerberg says that people have a lot of choices for how they want to spend their time in apps, like TikTok, are growing very quickly. And that's important, that investors are paying a ton of attention to growth, and TikTok is growing much more quickly than Facebook is. Zuckerberg also says the thing that is somewhat unique here is that TikTok is so big as a competitor already, and also continues to grow at quite a fast rate off a very large base. The comparison to Facebook is interesting, because Facebook is also massive. But it's not growing as quickly as TikTok is. Now, admittedly, TikTok's in more of a niche at the moment than Facebook is, but that's the concern, is that investors look at a platform like TikTok, see it growing as quickly as it is, look at Facebook, see it not growing as quickly, and really start to wonder, what does the future hold for Facebook? Can it get back to growing the way it had in the past? Or is it flatlining, and this is more of a steady-as-she-goes utility type model? If that's the case, then the company is going to be valued very differently than if investors can expect continued compounded growth relative to historical levels. So again, with all these open questions about Facebook's performance and where it stands relative to competitors like Google or TikTok, as these concerns all coalesce, we can see a huge negative stock price move like we do today, where the stock price is down 20 to 25% in a single day. Here I wanted to give you a look into a couple different data points about why investors may be reacting so negatively to Facebook stock today in such an aggressive way, where the stock price is down over 20%. I didn't do a complete, thorough analysis of Facebook as a business. If that's something you're interested in, let me know in the comments down below, because we can do these kinds of deep dives into businesses together to get a lay of the land, some context, a baseline, to really understand how these businesses make money, and then put the kinds of changes that we see in the most recent earnings report into context. This is a more targeted look into the motivations behind a single stock price action. Lastly, I have two other videos that I recommend to you. In the first one, I did an analysis of Disney, its performance, how it compares to competitors in specific ways, some more context around how it responded to the coronavirus pandemic, and you can see that one in the link right here and in the description for this video. Another video I did was a list of free data sources that you can use to build context around your business analysis. It's nice to get the data for a specific business. It's very helpful to get data for the economy surrounding that business, for other entities around that business that can help you understand why the business you're investigating is performing the way it is. And you can check out that video again here and in the link below. Thanks for stopping by.